Welcome back to our in-depth modules on mastering LLCs for real estate investing. Following Module 5, where we explored the critical role of operating agreements from why even single-member setups need one to safeguard liability and tax strategies, to incorporating real estate-specific clauses like asset protection language and profit splits to prevent disputes in joint ventures. Module 6, EIN IRS Registration. This module is foundational for operationalizing your LLC, as the employer identification number serves as your entity's social security number, enabling everything from opening business bank accounts and securing real estate loans to filing taxes and hiring contractors for property renovations. In the context of 2026's economic environment marked by persistent inflation hovering at 3 to 4% per recent Federal Reserve reports, heightened IRS audits on small businesses, which is up 20% from 2025 according to IRS data releases, and new digital compliance tools under the Inflation Reduction Act's expanded enforcement, and this process demands precision to avoid delays that could derail time-sensitive REI deals, like closing on a distressed property during a market dip. We'll go extensively deeper here, drawing on the latest IRS guidelines as of January 2026, including maintenance blackouts and online application nuances, factual insights from legal precedents and statistics, pros and cons, real-world investor stories, and explicit do's and don'ts to guide you. We'll cover obtaining an EIN step-by-step with DIY and service options, the nuances of single-member versus multi-member tax classifications, disregarded entities in detail, IRS confirmation letters and their procurement, and EIN errors that can block accounts and credit. This knowledge is grounded in IRS publications, court cases, and industry reports to ensure your LLC is tax compliant and bank ready from day one. Remember, this is educational. Consult a tax professional or attorney for your situation, as errors here can trigger penalties up to $50,000 or more in extreme cases of non-compliance. Let's dive in, tying every element back to how it empowers your real estate business. Starting with obtaining an EIN step by step. This is the IRS-issued 9-digit number required for most LLCs to identify the entity for federal tax purposes, much like a social security number for individuals. As of January 2026, the process remains online via the IRS website, but with key limitations and recent tweaks for efficiency and security amid rising identity theft concerns. Because the IRS reported a 15% increase in EIN-related fraud attempts in 2025. Facts. Every LLC needs an EIN if it has employees, operates as a corporation or partnership for taxes, withholds taxes on non-wage income to non-resident aliens, or is involved in certain trusts, estates, or retirement plans, and even single-member LLCs often require one for banking, as 90% of U.S. banks mandate it for business accounts per a 2025 FDIC survey. Pros: free and instant approval if eligible, enabling quick setup for real estate ops like applying for property permits or vendor credit lines. Cons: strict eligibility because U.S.-based principal business, responsible party with valid SSN or EIN, 1 per day limit per responsible party, and session timeouts every 15 minutes. Do's: apply after state formation to avoid mismatches. Use the online tool during operational hours, which is Monday to Friday 6 a.m. to 1 a.m. Eastern Time. Don'ts: 1. Apply internationally if you do use fax mail phone instead. 2. Submit incomplete info as it leads to rejections. 3. Apply unnecessarily. 4. If a disregarded single-member LLC without employees though for REI, always get one for banking and credit building. Step-by-step process. 1. Confirm eligibility because your LLC must be U.S. based and you need a valid social security number, EIN, or EIN. Third parties need Form SS4 authorization. 2. Access irs.gov, search, apply for EIN, and start the online assistant. Answer entity type and select LLC number of members because this affects classification, state of formation, and reason. 3. Provide responsible party details like name, SSN, or EIN, address, and this must match IRS records to avoid Reference 101 errors. 4. Submit in one session with no saving. If approved, receive EIN immediately with a printable CP 575 confirmation letter. For alternatives, fax or mail Form SS4. Processing is 4 to 6 weeks, or 2 weeks for expedited. Phone number is 800-829-4933 for US and 859-669-5987 for international, and this is a 4 to 6 week confirmation. In REI, apply post-filing but pre-banking to title properties correctly. Story depth. Investor Maya in Nevada formed her LLC in early 2026 but applied for EIN too early, triggering a reference 114 error, which is entity not yet recognized, delaying her rental purchase by 2 weeks and costing $2,500 in holding fees. This was corrected by resubmitting post-formation. She got her EIN instantly, allowing a smooth bank setup and first tenant lease. Knowledge. 2026 sees IRS piloting AI-assisted applications for faster fraud detection, reducing approval times by 10% but increasing rejections for mismatches. Now, single member versus multi-member tax classification. This IRS designation determines how your LLC reports income, profoundly impacting REI. Strategies like depreciation deductions, which is up to $1.16 million under 20 to 26. Section 179 limits, and self-employment taxes, which is 15.3% on net earnings. Facts. By default, single-member LLCs are disregarded entities, or treated as sole proprietorships for taxes, while multi-member are partnerships unless electing otherwise via Form 8832, which is entity classification, or Form 2553, which is S-Corp. Single-member. All income or losses flow to your personal 1040 via Schedule C for business, E for rental, or F for farm, and doesn't need a separate return. Pros include simplicity and doesn't need Form 1065, full control, and easier 1031 exchanges for property swaps. Cons. Full self-employment tax on profits, which is up to $168,600 Social Security wage base in 2026, no salary deductions and personal liability for audits. Multi-member, treated as partnership, filing Form 1065 and issuing K-1s to members for their shares. Pros. Flexible allocations and not tied to ownership, potential self-employment tax savings via guaranteed payments, and better for raising capital in REI syndications. Cons. Complex filing, which is Form 1065 and is due March 15th, basis tracking for losses, and partnership audits under BBA rules and decentralized since 2018. Do's. Elect S-Corp for either, if active, and file Form 2553 by March 15th for current year to avoid self-employment on distributions. Consider qualified joint venture for spousal multi-member LLCs to file as two sole props. Don'ts. 1. Change classification frivolously because it is limited to once every 5 years without IRS relief. 2. Ignore state taxes because California imposes $800 fines on all LLCs regardless. In REI, single suit solo landlords, which is simpler for multiple rentals, multi for partners, and is better loss pass-through. Story. Brothers Alex and Ben in Texas started a multi-member LLC in 2025 for flips. The default partnership let them allocate 60-40 based on effort, saving $4,000 in self-employment taxes, but forgetting their K-1s triggered an IRS notice. Delaying a refinance and electing S-Corp mid-year streamlined it. Knowledge. 2026. IRS emphasizes elections for audit proofing. 70% of REI LLCs are single-member per NAEA stats. Disregarded entities term applies primarily to single-member LLCs where the entity is ignored for federal income tax, treating it as part of the owner. Facts. Introduced in 1997 check-the-box regulations, disregarded status means no separate return and income or losses report on owner's form like a Schedule E for rentals. For real estate, ideal for holding properties, as depreciation and expenses flow directly, enabling passive loss rules which are up to $25,000 offset, if adjusted gross income less than $100,000. Pros. Simplicity, no double taxation, easier compliance for solo investors. Cons. Owner pays self-employment on trade or business income, separate for employment or excise taxes since 2009, and you can use EIN for Forms 9, 41, 720. Do's. Use owner's social security number for income reporting if no employees. Obtain EIN for banking or credit and elect out via Form 8832 if scaling. Don'ts. 1. Commingle funds because it pierces veil. 2. Treat as disregarded for state taxes. Story. Solo investor Rita in Florida disregarded her LLC in 2026 for a triplex. Direct Schedule E filing saved $500 in prep fees, but overlooking excise for fuel in maintenance and required retro EIN, thus fixing a bank hold. 2026 updates. No major changes, but enhanced IRS matching for TINs. IRS confirmation letters like the CP575 notice verifies your EIN, which is essential for proving legitimacy. Facts, issued instantly online. Replacements via phone, which is 800-829-4933, Form SS4 mail, which takes 4 to 6 weeks. Importance: banks require for accounts, and banks like Chase verifies via letter, and credit bureaus for DUNS. Do's: print or save immediately, request replacement if lost. Don'ts: use faxed copies for banking story, lost letter delayed Tom's Credit app, called by phone for replacement and fixed it. Finally, EIN errors that block accounts and credit. Common pitfalls like Reference 101, which is name or social security number conflict, Reference 109, which is overload or eligibility, incorrect info. Facts: 1. Affect 20% of apps per IRS. 2. Blocks banking until fixed. Pros of avoidance: smooth ops. Cons: delays credit building. Do's: verify social security number and apply post formation. Don'ts: apply unnecessarily or provide wrong entity type.